In this video, guys, we're going to address the question, does a moving average crossover system really work? Hey traders, warm welcome to you. Right, moving average crossover system, does it really work? Question from a viewer or a subscriber. Appreciate your question, and also appreciate, by the way, any ideas for trading videos that you want to hear about. If I can share some knowledge about it, if I can find somebody who can share some knowledge, then I'll share it with you guys. Right, so moving average crossover system. Okay, if you've watched my videos, you're going to see some interesting stuff, right? I've done some videos where I've talked specifically about a moving average crossover system, using it as a strategy. Talked specifically about, I think it was from using a moving average scalping system on currency pairs, which, as I said in that video, you've got to exercise with caution. So let's have a look at this anyway. So moving average crossover, let's not jump ahead of ourselves, guys. Moving average crossover is pretty much like this, right? You've got one moving average, which is your fast moving average, and then you've got another moving average here, which is your slow moving average, okay? And this one's your fast. Those settings might be something like, I don't know, slow might be 100 period moving average. The fast one might be a 20 period moving average, something like that. Anyway, the idea is that when when the moving averages cross, you buy. So whenever that point is there, wherever price may be, and it may well be up here. Imagine this is what price is doing. That's probably a bit loose, but imagine that's when you're buying at that point there. Okay. Now there are some variations on it. Some variations are that when price crosses the moving average, but a moving average crossover traditionally is when you've got to cross the fast, it's crossing the slow. So when the fast crosses the slow, bang, you buy. When the fast crosses below the slow, you sell and go short, or you go short only. Right. That's the theory of it. Now, as I've mentioned before, guys, even the most simple of strategies like this, is the most simple strategy, can be super effective in the right conditions. In the wrong conditions, they are absolutely useless. So if we're in a trending market and this carries on trending up now for a long time, then a moving average crossover system is as good a system as any to get on. It's a little bit late, right, depending on what sort of numbers you're using here. So as it crosses over, the price might be high, you might be chasing a bit, but hey, if you're in a monster trend, it doesn't matter too much, because you can sit and stomach some pullbacks until it goes up and carries on exponentially to the highs. And if you look at a chart and a bull market, even our recent bull run that we've had 2017-ish, 2016, 17, well, basically from the crisis till 2018 or so, 2017 really is a bit funny, 18, drive up, steady chug, moving average crossover system would have worked beautifully. Okay, so that's not really answers the question though, is it? Because really the answer to the question is, well, if I know it's going to be an uptrend, then I will just buy. No, I don't need a moving average crossover. That's true. And this is why systems, even though people say this system works, yes, but you have to implement the correct system for the correct environment. If we now go into a range-bound environment, a moving average crossover system will just kill you. You will just get chopped to death. You will be long here, you'll be short here, you'll be long here as the moving averages kind of converge together. And if you look at, don't believe me, go and bring up any of your favorite charts and have a look, and you'll have, you know, fast crossing. It'll be just to be doing this permanently. So you'll be long, short, long, short, long, short, chasing your tail and getting stopped and whipped out. So the key, guys, to having a successful strategy, and then we can use this moving average crossover system as an example, is that to make an assessment on the market conditions and use a strategy that works for the market conditions. I could quite easily say, hey, what about if I use a stochastic, right? And that doesn't mirror that at all, but there's my overbought, there's my oversold. Is fading an overbought condition a good system? I would say, you know what? It's a killer system in this environment, because likely that's overbought, oversold, sold. You get the idea. You're fading those, you're going to make a mint. But are you going to start fading highs of overbought in a trending environment? Because overbought will stay overbought for a long time and you'll just get killed. So you've got to look at the bigger picture, guys. You've got to say, okay, well, this system works well in these conditions, but I need something else. I need to judge what the conditions of the current market are, or I need to find a market that is trending. If you have, this is where your trading skill comes in, right? Do you decide, okay, I'm going to filter for trending markets. I'm going to look for assumptions that the trend is going to continue, because the trend could stop as soon as you go in and you don't know that. So you need some risk management as well, which is another thing altogether. But the point is, you can use the simplest system possible. And ultimately, guys, even the turtle trading was very, very simple. It was buying a 20-day breakout. I can't remember the number, but it was basically buying a breakout in a trending environment and then holding it for a long, long time. And that's the beauty of the moving average crossover, is that it's holding it for a long, long time. Now, when would you use this? You might use this, let's use some examples here. You might say to yourself, all right, well, I know this captures good trends. How do I get on the end of a trend? Now, if a trend's been going for a while, you might make the assumption it's going to continue. Let's say it unwinds a little bit, so you buy it again on the cross back up. That's one way you could do it. Or if you really fancied kind of sticking your neck on the line, you could look for something that's been in a downtrend, maybe consolidating at lows, maybe starting to pick up. Perhaps there's more bullish news coming out on it. Perhaps there's more demand coming in for the asset, the commodity, the stock, the currency, whatever. Then as it starts to curl up, you can say, okay, well, actually, you know what? I am early. The chances are this might not be the start of a bull trend, but if I implement a moving average crossover system, I can get into it. I know I've got a reasonably capped risk, and if I'm right, I'm going to get a massive payoff. That's the one good thing about this, is it's got a massive payoff. Would you just go ahead and just start trading this blindly? No, because you'll lose money, guys. Unless you're lucky enough to have it and trade it in the right environment, in a super, super trending environment, then it's just down to luck. You've got to look at the conditions, try to judge the conditions of the market you're trading, and then use a strategy for that market conditions, for the market you're trading, for the market type, the volatility, the volume, and all that kind of stuff. That's where the sweet spot comes in. These are all very, very good under certain conditions. Now, one final thing before we call it a day. I like moving average crossover as a filter only. I'm not a big fan of taking it, and I mentioned this in one of the previous videos, I'm not a big fan of blindly chasing stuff, because I do feel sometimes you are chasing highs a bit. However, I like it using it as a filter. Okay, so you can say, right, I'm taking longs on this stock, on this instrument, on this currency pair, whatever it may be, when the fast is over the slow. That doesn't necessarily mean I'm going to take the trade. It just means that that's a filter for me. It's like, okay, well, it's longs only now because we've got the fast is over the slow, or it's shorts only because the fast is low. It's just an initial filtering criteria to keep you on the right side. I think that's a more powerful way, and then you add other layers on, like some perhaps price action stuff. And by the way, check out a link in the description below if you want to find more out about price action type trading. But then you add an extra layer in. You go, okay, right, I've got a filter, and maybe another filter, maybe a third, and then to pull the trigger, you're waiting for a specific pattern, a specific short-term price action pattern that you can get on. That then becomes way more powerful than blindly buying or selling when a moving average crosses one or the other. Because like I say, I feel like you're chasing it, and I feel like you have to have, well, I know you have to have the right conditions for that. Otherwise, you'll just get hammered, because if it goes into that environment, you'll think it's just a rubbish system. If you're in that environment, you get lucky, then great, but at some point, it'll flip to that. So it's just being a little bit aware of the suitability and how powerful or not the strategy and system could be depending on the current conditions. All right, guys, I hope this answered the question, and I appreciate, as always, your questions and support. Take care. Bye-bye.